GST Relearn Refresher Series Virtual Part 2. I think we had an amazing roundup and feedback and support from all participants in the Part 1. We're very glad to organize from WRC this Relearn Refresher Series on GST Part 2, which is once again. And today we've got this amazing topic on infra works contract energy, which will be taken in the first half today by CA Jignesh Kansara, sir. Thank you very much, sir, for being there. And the second half today will be taken by CA Sunil Dandekar, sir, on NGO Trust and Cooperative Society. Thank you so much, Sunil, sir, for being there. Before we actually begin, I'll request everyone to please place your hand on your heart for ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तदब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता
Thank you so much, everyone. While our chairman, sir, joins in, I think we can just start with introductions, which I'll request CA Piyush. I'll request CA Piyush Chandakji, our immediate past treasurer from WRC, to please introduce our first speaker, CA Jignesh Kansara, sir.
Okay, thank you, Rudesh Bhai. As rightly said by Rudesh Bhai, the series of Relearn, the entire gamut of taxation practice is like this, that we have to learn first, then unlearn whenever the provisions are changed, unlearn the earlier learned things, and relearn the new things. And this is how the series is named for. And we have, along with us, now Jignesh Kansara. He is a practicing member of ICAI since 2002, and his professional and social activities includes he is presently a member of Indirect Tax Committee of BCAS, presently a member of Law and Representation Committee of GST and he was also associated with our WIRC as a member of Indirect Tax Committee in 1819 and 2021. He also has authored books and books on indirect taxes, GST refunds, law procedure practice, practical guide, which is published by GST and he is also visiting faculty at NASIN and founder member of CGPI. With this brief introduction, I'll hand over to Rudesh Bhai for further process. Thank you, Rudesh Bhai.
Thank you so much, Piyush sir, for this amazing introduction of CA Jignesh Kansara, sir. We have with us CA Saurabh Ajmera ji, the secretary from WRC of ICI. I'll request Saurabh Bhai to kindly give your remarks for our amazing GST series and our participants. Over to you, Saurabh ji.
Thank you, Rudesh. Very good evening to one and all. Faculty of the session, Sunil sir, Jignesh sir, and my regional council colleague Piyush Bhai. Friends, this year we at WRC is highly committed to empower all our members through various programs to uplift all the knowledge and to update all the knowledge. In this series, we are doing Relearn series in GST, and this is the second phase of this program in which we are today. Apart from that, we are
Saurabh bhai, I think there's a network issue.
Yes. There is a network issue, I guess.
Okay, we'll just wait for a minute. I think no worries. I think Saurabh sir should be just back.
आ गया कुछ.
Yes, Saurabh bhai.
I think there was network problem. So I was discussing about our existence of 75th year, and we have taken pride as a Mool Mantra for this year to work at WRC, where P stand for perform, and I stand for innovation, and then R is for relearning, in which we are doing this series for GST. We are also planning sectorial series for income tax also. Very soon we will launch over there. Sector-wise series will be there, in which insurance, hospitality, and then another sector we will add over there. So, and then I is innovation, where we are doing our best at WRC. In each and every program which we are launching, we are adding some technology innovations. Like in bank audit, we have done barcode system, where we are providing real-time update to all our members. Then in box cricket tournament, we have done a lot of things, including networking zone. In recent chairman communication, where newsletter, in also we are providing networking zone, through which all the needs of our members can be addressed directly. So innovation is our core, and we want to welcome all the suggestion for innovation at WRC from all our members. Then D stand for distinguish. Actually, we have to learn, but in a distinguished manner as per the requirement of the time. So that is why D is for distinguish, and then E for enrich our ecosystem. When we are saying enrich our ecosystem, friends, we are in 21st century, and the planet is also important, then profit is also important, and public is also important. To streamline all these things, social audit is now in our core. So we have to first focus on planet, then on public, and then on profit. So these 3 P's will be reversed accordingly. And ESG, in ESG environment, we have to enrich our ecosystem. This is our core again. So I request each one of you, please participate in all the activities of WRC, including all the programs which we are planning to empower our members. Thank you, Ritesh bhai, and thanks to all of you.
Thank you so much, Saurabh bhai, for this amazing address and letting us know about the various initiatives that we've had at WRC and ICI having. I think now it's the time to hear from CA Jignesh Kansara, sir. I'll request Jignesh sir to kindly take over, sir. Over to you.
Thank you, Ritesh. Thank you, Pawanji. Thank you, Secretary Sir, Chairman Sir in absence, and other office bearers. Thank you for having me here. And thank you for giving me opportunity to learn many things. Generally, we know many things in our conscious mind. But when we prepare for seminar, we actually transfer our knowledge from conscious mind to subconscious mind. And friends, believe me, for litigation, for consultancy, what we need is knowledge in our subconscious mind, because client asks so many questions, and in a real life situation, unless we have things in our subconscious mind, we can't deliver. So thank you for this opportunity. Topic given to me is GST issues of works contract, including infra and energy sector. So I will start my presentation. Rudesi, can you please confirm you can see my screen? I'm just sharing my screen now. Is it visible?
Yes, sir.
Is it moving?
We're on the Zoom. Yeah, we can see the PPT, sir.
It is moving also, correct?
Yes.
Yeah, thank you. Thank you. Yeah. So friends, starting with my topic, works contract. Now, friends, this concept works contract is not a new concept for us. You have been listening to this concept in Bombay sales tax era, then of course in VAT era, and we had similar concept even in service tax. In fact, works contract to some extent was a double whammy for businessmen. We have seen many instances where taxpayer were paying VAT as well as service tax. With introduction of GST, at least that double taxation has gone. However, it has given rise to many other new challenges. So let us understand those challenges now in a brief manner. If you want to see history of works contract, we need to see Supreme Court judgment in Gannon-Dunkerley. We may also need to see K. Raheja judgment, 101st constitutional amendments, BSNL judgment. These are, I would say, bedrock of this topic. However, for our series or for our topic, let us start with section 2, subsection 119. This subsection defines works contract. On your screen, I have tried to paraphrase a definition of works contract. It reads, works contract means, I'm pausing here for a minute, means, it means it is exclusive and exhaustive definition. Works contract means a contract for, on your screen you can see there are 14 instances. And in between there is a or. So either of these 14 of any immovable property wherein transfer of property in goods, whether as goods or in some other form, is involved in the execution of such contract. So this is what definition says. Now friends, this 14 instance, these are not defined. So we may have to take its meaning from dictionary. But we know what to mean by construction, fabrication, we generally know. So I will not get into this 14 instances right now. We will move on. I will ignore immovable property for the time being. There should be transfer of property in goods. And that transfer may be in the form of goods, in the same form, or maybe in some other form. And that transfer of property should happen during execution of such works contract. Now, first of all, we need to understand there's a difference between works contract and contract for work. Contract for work means pure labor services. Whereas in case of works contract, there is transfer of property also. If we see judgment of past regime, that Supreme Court judgment says that if goods are getting consumed or exhausted during execution of such contract, then there is no transfer of property as far as those goods are concerned. So for example, water, electricity, these are getting consumed. Chemicals are getting consumed, they are getting evaporated, and it never remains present in the final product. So as far as this consumables are concerned, there is no transfer of property. However, this does not mean that supplier will not value them while working out valuation of works contract services. So there are instances where supplier need to work out value as per valuation rule. And in that situation, even value of such consumables needs to be included to find out value of works contract. Now, what do you mean by transfer of property? So take a case. Supplier was the owner of certain goods. During works contract, recipient became owner of that goods. So there is virtual transfer of property. It doesn't speak about transfer of title, it says transfer of property. And that should happen during execution of such contract. Now let's take example. Purchase of AC with installation. So installation is there. Does this mean purchase of AC with installation is works contract service? Installation is one of the instance covered in this 14 instance. So answer is big no. Because for works contract, all these contracts should be in relation to immovable property. Friends, such condition was not there in pre-GST regime. In GST regime, unless and until contract is for immovable property, it is not works contract. So in present case, when AC along with installation services are bought, this AC, even though attached to wall or attached to earth, still it will not become immovable property, and that's why this transaction will not fall within the domain of works contract. Whereas in earlier regime, we could have very well covered this under the domain of works contract. So now, immovable property, if it is heart of works contract definition, let us understand meaning of term immovable property. Now, unfortunately, this term is not defined in the Act. However, you will find definition of immovable property in General Clauses Act, and this is inclusive definition. Definition reads: immovable property shall include land. You know what is land? Benefit to arise out of land. So, for example, your development rights. It is benefit arising out of land. So, land, development rights, and things attached to earth or permanently fastened to anything attached to earth. If these conditions are fulfilled, then it is immovable property. So land is immovable property, development right is immovable property, and anything attached to earth is also immovable property. What do you mean by attached to earth? It's a very wide term. So we need to understand exact meaning of term attached to earth. Unfortunately, that is again not defined in General Clauses Act, but that is defined in Transfer Property Act. Again, an exhaustive definition. Attached to earth means A, rooted in the earth, as in the case of trees and shrubs. B, embedded in the earth, as in the case of wall or buildings. Or C, attached to what is so embedded for the permanent beneficial enjoyment of that to which it is attached. So there are three limbs here, A, B, and C. We will see each of them one by one. If we focus on clause A and B, it speaks about degree of attachment. So in case of trees and shrubs, or in case of walls or buildings, degree of attachment is too deep. When we speak about limb C, third limb, it speaks about object of annexation or object of attachment. If any of these three conditions are fulfilled, then it is attached to earth. And if something is attached to earth, then it is immovable property. If it is immovable property, then it is works contract. I'm pausing here. Friends, whether transaction is a works contract service or not requires a lot of homework, a lot of paperwork, a lot of documentation. If it proves out to be otherwise, your tax rate may vary, your compliances may change, your right to avail ITC may be affected. And believe me, all works contract services invariably are high value contracts. So we need to do a lot of homework to decide whether transaction in question is a works contract or not. Our guiding principle will be whether it is immovable property, whether there is transfer of property in goods during execution, and whether that activity will fall within the 14 instances given here. If yes, it is works contract. Otherwise, it is not works contract. If it is not works contract, how to deal with that situation, we will see subsequently. Right now, let us focus on works contract. And let us go through some landmark Supreme Court judgment. This judgment will help us to understand real meaning of term attached to earth. So I'm presenting before you Supreme Court judgment in the case of solid and collect engineering works. I will read out this judgment. This is important para of this judgment. I will pause in between and then we can have discussion on that para. Attachment of plant with the help of nuts and bolts to a foundation intended to provide stability to the working of plant and prevent vibration, wobble-free operation does not qualify for being described as attached to earth under any of the three clauses accepted above. Supreme Court says that if with the help of nuts and bolts, we are attaching a plant to a foundation, an intention of this attachment was to ensure vibration-free, wobble-free operation, then just mere attachment does not make that plant as immovable property. And friends, you must have observed all these big machineries, they consume a lot of power. And that's why there is a lot of vibration happening in the machinery. Unless machinery is properly, attached to earth, it will give a lot of jerk. And it may not be able to give a proper operational efficiency. So for that purpose, if machinery is attached to earth, that does not mean it is immovable property. And then court has tried to explain why it has come to this ratio. So this ratio decidency of this judgment is explained in this para. Court has further said that is because attachment of plant to the foundation is not comparable or synonymous to trees and shrubs rooted in the earth. So this condition. It was trying to analyze whether mere attachment for operational efficiency is satisfying this condition. And court has found that it is not similar. Further, it is also not synonymous to embedding in the earth of the plant as in the case of walls and buildings. For the obvious reason that the building embedded in the earth is permanent and cannot be detached without demolition. Another fundamental principle. If something is permanent and cannot be detached ordinarily without demolishing, then it is difficult to say it is immovable. Embedding of wall in earth is also in no way comparable to attachment of plant to a foundation meant only to provide stability to the plant, especially because attachment is not permanent, and what is attached can be easily detached from the foundation. So for some reason I have attached machinery to foundation, but if I can easily detach, then it is not immovable, it is still immovable. Further court remark, and this is very important. So also attachment of plant to foundation at which it rests does not fall in third category. For an attachment to fall in that category, it must be permanent beneficial enjoyment of that to which plant is attached. I will focus on this clause C. This is a little bit tricky. Attached to what is so embedded for the permanent beneficial enjoyment of that to which it is attached. So whether attachment was for beneficial enjoyment of plant or beneficial enjoyment of foundation or land. If it is for beneficial enjoyment of plant, then it is not immovable. If it is for beneficial enjoyment of foundation or land, then it is immovable. Court finally concluded, it is nobody's case that attachment of plant to foundation is meant for permanent beneficial enjoyment of either the foundation or the land in which same is embedded. Friends, this definition or the principle coming out from this judgment will help us in section 17(5)(c), because generally department take a stand that in case of works contract, supplier is not eligible to claim ITC unless we have sound understanding of all these principles laid down by Supreme Court. We may lose our case. So what court has said in this judgment, that mere attachment to earth is not a deciding criteria. Let us focus on another judgment now. It is again Supreme Court, Municipal Corporation of Greater Bombay versus Indian Oil. Now, in this judgment, court has remarked, chattel means any article or goods, whether movable to another place of use in the same position or liable to be dismantled and re-erected at a later place. So court has laid down one criteria. Court has said whether these goods or articles can be moved to another place of use in the same position, or to remove, we need to first dismantle at original place and then re-erect at a new place. If answer is yes to the former, it is movable, and thereby it is not attached to earth. If answer is yes to latter, it is attached to earth. So what is coming out from this judgment? If chattel attached to earth can't be removed without structural damage, then it is immovable property. If chattel attached to earth can be removed without structural damage, then it is movable property. So take a case of lift in a building. Can you remove lift easily? Answer is little bit no, because lift is constructed as per area, available area. Depending upon size of the area, foundation is laid down and lift is constructed. If you want to remove lift, you can still do it, but there will be some damage. Whereas a case of your AC, say window AC or split AC, can we remove easily? Answer is yes, without any damage. And that's why window AC is a movable property, but lift is a immovable property. Further, there is a past CBSE circular of 2002, which says if goods are capable of being sold without dismantling, but are dismantled solely for the purpose of ease of transportation, still it is movable. So this judgment speaks about degree of attachment. If it is deeply attached, whereby without structural damage it cannot be removed, then a view emerges that it is immovable property. But if it can be removed without structural damage, then it is movable property. And once it is movable property, it is outside the domain of works contract. Let us see one more celebrity judgment of Sirpur paper mills. While court was delivering this judgment, court has given one example. Let us run through this example. For example, a factory owner or a householder may purchase a water pump and fix it on a cement base for operational efficiency and also for security. That will not make water pump an item of immovable property. Just because plant and machinery are fixed in the earth for better functioning, it does not automatically become immovable property. Friends, in past era, people were devising ways to classify their goods as immovable property, because if it is immovable, then there is no question of excise and VAT. And in that context, this judgment was delivered and court has given this example. So if article attached adds in permanent enjoyment of land and building, then it is immovable property. But if article is attached for the beneficial enjoyment of article, in this case water pump, then article still remains movable. So this judgment talks about object of attachment. So we have seen three landmark judgment. First judgment says just because it is attached to earth, it does not become immovable. Second judgment says you have to look into degree of attachment. And third judgment says you should also be guided by object of attachment. Basis these three judgments, we need to find out whether transaction can be classified as transaction of immovable property. If yes, and if other conditions are getting fulfilled, then it is works contract. Assuming we have passed this test, then what? Then we have section 7, speaks about scope of supply. Earlier there was section 7.1 subclause B, and now we have section 7.1a. This 7.1a says where certain activities or transactions constitute supply in accordance with provision of section 1, they shall be treated either a supply of goods or supply of service as referred to in schedule 1. So this subsection says just because goods or service is finding place in schedule 2, it does not become supply. You have to first satisfy condition of 7.1, and if that condition is satisfied, then classification will happen as per schedule 2. There is some typing error here. Read is schedule 2. Now in schedule 2, there is a para 6a. This para 6a reads composite supply of works contract as defined in section 2 subsection 119, which we have seen just now, shall be treated as supply of service. So this para says if it is works contract, and works contract obviously will be composite supply of goods as well as services, and if it is falling within the definition of 2119, then such activity or transaction will be classified as supply of service. Does this mean irrespective of whether principal supply of goods or service, we have to classify this as service? Do we need to see dominant intention? What was the intention of the contracting parties? Or we have to simply go by para 6a of schedule 2? If you see advanced ruling says simply go by para 6a and classify this as works contract. To my mind, still principle of dominant intention, principle of composite supply will have some bearing on this topic. But again, this is a disputed matter. We will handle dispute on this when we talk about power sector. There is a writ filed on this issue. So please bear with us for the timing. Right now, we presume that works contract is a service. Surprisingly, if we go to Constitution, Article 366(29)(a), it says works contract is a supply of goods. Constitution is saying supply of goods. Schedule 2 says it is supply of service. There is some clash, but in either case there is liability. It is taxable. Of course, certain provisions may change. Now we are dealing with one bigger question. When schedule 2 says it is supply of service, are we allowed to split our contract? Can we say it is supply of goods, separate contract, commissioning is separate contract. Is it allowed? It's a big question. Advance ruling says, sorry, it can't be done. Now, typically, if you see such contracts are well written because they run into crores of rupees. Assume a situation, there are two contracts, one for supply of goods, one for erection, installation, etc. Consideration is separately defined in both the contracts. However, both the contracts are connected by way of cross-fall breach clause. Now, cross-fall breach clause is a clause whereby if there is violation in one contract, then it leads to automatic violation in second contract. So for some reason, goods could not be delivered in time. Automatically, even erection contract will be treated as breached. There is a violation here. So question arises, whether in such situation where there are two contracts, two separate consideration, but contracts are linked through cross-fall breach, is it separate supply of goods or service, or it is works contract? Advance ruling says it is works contract. If we presume that para 6A of schedule 2 is sacrosanct, nobody can challenge it, then friends, I'm sorry. CBIC itself has violated and has said that composite contract can also be bifurcated. And this has been done in solar power generating system. We will see this subsequently, where the explanation was added, saying that 70% pertains to goods, 30% pertains to service. Now we know there is something called composite, something called mixed, something called independent, and something called works contract. But proportionate, this was unheard of, but this is on since almost 3 years now. Works contract generally will be classified under HSN 9954. Now, from 18th July, general rate is 18%, only few exemption and few exception, which you will see subsequently. Presuming that we are not fulfilling condition of immovable property, then how to tax such transaction? If it is not immovable, by that I mean it is movable, then it is not works contract. For taxability purpose, you will have to rely on composite supply or mixed supply or concept of independent supply coming out from CBIC Circular 47. So in case of car repair, there is transfer of ownership of spare parts during execution of repair work, but it is not immovable, and that's why it is not works contract, and it may be classified as independent supply as explained in Circular 47. There is one more judgment of Triveni Engineering, Supreme Court, where court has said, while determining whether an article is permanently fastened to anything attached to earth, both the intention as well as fact of fastening has to be ascertained from fact and circumstances of each case. Friends, till now, we were on works contract definition, and we were trying to figure out whether activity or transaction is a works contract or not. And if it is works contract, then you will have to go to schedule, tariff entry, and ascertain a rate on its outward supply. But before we go into rate part, let us go through one important aspect of block credits. So friends, works contract transactions are restricted ITC contracts. There are certain restrictions. 17(5)(c) reads, no ITC shall be available in respect of works contract service when supplied for construction of immobile property. I'm posing here. We have seen just now works contract is a immobile property transaction. And again, department is clarifying immobile property. Two reasons. First of all, they are more cautious. Secondly, they want to give exemption to plant and machinery. That's why it is drafted in such a manner. Works contract services, that is services falling under 2119, which is predominantly or which is essentially immobile transactions, when supplied for construction of immobile property other than plant and machinery, except where it is an input service for further supply of works contract services. We will see this in detail, but let us read clause D also. However, clause D is not relevant for today's session. Sunil sir must, this has been already covered by Sunil sir in real estate transaction. 17(5)(d) says goods or service or both received by taxable person for construction of immobile property. Again, here exemption of plant and machinery on his own account, including when such goods or service or both are used in the course or furtherance of business. There is explanation. For the purpose of clause C and D, expression construction includes reconstruction, renovation, addition, alteration, or repairs, very important, to the extent of capitalization to the said immobile property. Let us read further. There is one more explanation. For the purpose of this chapter, that is chapter 5 and chapter 6, expression plant and machinery means apparatus, equipment, machinery fixed to earth by foundation, or structural support that are used for making outward supply of goods or service or both, and includes such foundation and structural support, but excludes land, building, other civil structure, telecommunication tower, and pipelines laid outside the factory premises. So we have read this. Let us understand what is coming out of from this explanation. So if we go by this explanation, it says apparatus is a machinery, equipment is a machinery, even machinery attached to earth by way of foundation. So if some platform has been created, that platform is always a civil structure, and on that platform machinery is fixed, and obviously this platform will be on earth. Still that is plant. And if it is plant, then it is outside the domain of 17(5)(c). If it is plant, we are outside the clutches of block credits. And this explanation says even a structural support or a foundation is a part of plant and machinery. However, land is not a part of plant and machinery. Building is not a part of plant and machinery. Civil structure is again outside, is not a plant and machinery. Telecommunication tower expressly has been kept out. Pipelines laid outside factory premises, though logically it's a part of plant and machinery, but it has been kept out. Once it is not plant and machinery, recipient is ineligible to claim such ITC because it is blocked. Let us understand ITC on works contract service. If such works contract service is used for construction of immobile property, generally there is no ITC. It is blocked. However, there are some exceptions. First exception, plant and machinery. And for meaning of plant and machinery, you have to go by explanation. Second exception, if there is further supply. So works contractor who is availing works contract service to provide works contract service, he can avail ITC. And third, if such works contract service is not capitalized, if it is expense out in compliance with generally accepted accounting principles, then ITC is eligible. Otherwise, ITC is blocked. Now, friends, these were the issues in Salvet era, and you can see similar issues raised before Advanced Ruling Authority in GST era. So let us take an example. For erection of plant and machinery, a foundation was built. Whether ITC will be eligible? Again, it's a fact-based situation. Generally, ITC is eligible, but if that foundation or structure falls, or it can be classified as civil structure, then ITC will not be eligible. ITC on shed prepared for storage of plant and machinery. So there is a factory shed, or maybe one shed is kept just above plant and machinery to protect it from sunlight or monsoon. Question arises whether on that shed can we claim ITC? Generally, friends, ITC will not be eligible because this cannot form part of plant and machinery. It's a structure. Further, as per generally accepted accounting principle, it will be capitalized, and therefore ITC will not be eligible. By the same logic, there cannot be ITC on works, on warehouse or factory shed. Can there be ITC on STP, sewage treatment plant? Past judgment says it is civil structure, ITC ineligible. Are we eligible to claim ITC on electrical fittings? Fortunately, advanced ruling says ITC is eligible. Friends, now we are in a situation where we have to decide whether foundation or a structure which is civil structure per se, whether on such structure can we claim ITC? And believe me, friends, for costly machineries, even foundation is equally costly. A lot of cement, steel, sand is consumed in this process. And question arises, can we say it is part of plant as per explanation? Or it is civil structure as per explanation? That's a big question. This dispute was there even in pre-GST regime, and I believe same will continue even in GST regime. So, question: if there are internal roads within the factory, is it civil structure or it is plant and machinery? Though it is fact-based, but my understanding says it is more of a civil structure. If that is a situation, if that is a case, what will happen to, say, electrical substation, transformer structure? In a factory, there are electrical substations without which manufacturing activity cannot be carried out. Is it plant or it is civil structure? Transformers are properly placed in factory, and a lot of civil work is carried out. Is it part of plant and machinery as per explanation, or it is civil structure? Again, friends, it's a fact-based situation. However, there are certain guidelines. There are many judgments from High Court as well as Supreme Court on this issue in Salvet regime, and I believe principle coming out from those jurisprudence will equally apply even in GST regime. So what are this test? So first test is functional test. If this structure is designed in such a manner that it is meant for facilitating supply and no other use. So if it is meant only for facilitating, say, manufacturing process, and it can't be put to any other use, then a view emerge that it is plant and machinery. But if it is general structure, not necessary for that plant and machinery itself, then a view emerge that it is civil structure. Another test, essential amenity or convenience test. So for a big plant and machinery, we have constructed a shed just above plant and machinery. Is it essential amenity or it is convenience? Whether without this plant cannot function, or it is mere of a comfort, or it is for good functioning of plant. Third test, means versus setting test. Whether structure is compulsory or it is merely a setting. Like in case of multiplex, whether that structure is compulsory or without that also business can be run. So if you see in income tax, there are judgments to and fro, which says that cinema hall is a plant and machinery. So these guidelines, courts have decided, and based on this guideline, we need to work out whether a foundation or structural support will form part of plant and machinery or will form part of civil structure. Believe me, friends, department will say it is part of civil structure. And as a consultant, it is our job to guide client to arrive at conclusion whether it is plant or otherwise. If it is plant, ITC is eligible. We have now covered 17(5)(c). Generally, presumption is that ITC will not be eligible because ITC is blocked. But if we are falling within the exceptions given in the section itself, then ITC is available. Right now, Supreme Court hearing is on in case of safari retreat. I am told yesterday hearing had happened. AG has presented his case, and now hearing is deferred to tomorrow. Friends, I will spend a minute on safari because again it is question of block credits. So what was the fact in this judgment, in this case or litigation, I would say? That company was involved in construction of shopping mall. Now shopping mall is a mall property and there is transfer of property. So it is works contract service. Now once that mall has been constructed, company will let out on a monthly or yearly lease, and on that lease company will pay GST. So far there is no dispute. Now company intend to avail ITC on cost of constructing shopping mall. Company is taking a stand that on this cost I am paying a lot of input tax. Allow me to adjust those input tax against my future liability on lease rental. Somehow Odisha High Court has agreed to this view and has taken a pragmatic view that yes, if lease rental is taxable, then on corresponding cost ITC should be given. Now to what extent this argument will prevail before Supreme Court, it remains to be seen. And judgment may take some time. But unanimously, people are claiming credits, informing department, but they are not utilizing the same. Because if we don't claim, then 16(4) will be a major hurdle subsequently to claim those ITC. And if we claim and then utilize also, then in future, if Supreme Court does not agree with High Court view, then taxpayer may have to sell out interest. So to safeguard this situation, people are availing ITC but not utilizing. Many taxpayers are also informing department in writing so that there cannot be any allegation of fraud, etc. Friends, till 18th July, when we were speaking on this works contract, we were spending a lot of time on tariff entries. This is notification number 11 by 2017. And there was always a confusion whether this transaction will fall under serial number 3, this sub-series or this sub-series. There was a dispute as to rate 5%, 12% or 18%. If contractor is charging 12, whether subcontractor can charge 12 or they will subcontractor will have to charge 18. That was another dispute. To my understanding, not less than 50 advance rulings have been delivered on this topic. And majority of them are now redundant because with effect from 18th July 2022, all these concessional rate entries have been truncated. And now there are only few entries under HSN 9954. First entry 3.1 talks about construction service, that is builder's case, which is not the topic for the day. Entry number 2 to 6 has been deleted. This was subject to 12% rate. All your road, canals, dams, historical monuments, government contracts, everything was falling under this, and they were subject to 12% rate. That has been deleted now. Entry number 3.7, it talks about compulsory supply of works contract involving predominantly earthwork. That is more than 75% should be earthwork and provided to central government, state government or local authority. Only in this situation, only in this earthwork situation, GST rate will be 12%. That is entry number 3.7. And we have entry number 3.10, which says if contractor is falling under this 12%, then some contractor will also fall under 12% by virtue of entry 3.10. There is no confusion. There is no question of inverted duty structure here. So 12.12. Entry number 3.8. 3.8 is again a very limited entry which deals with ENP, that is exploration and production of gas and oil and gas. If such activity is carried out in offshore area beyond 12 nautical miles from the nearest land, then GST is 12%. Entry number 379 has been deleted. 311 is again a very narrow entry. It is for e-commerce operator. So if a urban company is providing housekeeping or plumbing, carpentry type of work, then it is 5% GST, provided no ITC has been claimed. Rest all will fall under residuary head, that is 18% GST. So massive change. Earlier, when GST was started, everything was subject to 18%, and now again we have come to full circle. No dispute as far as classification is concerned, 18%. Now, friends, such a major change from 18th July 2022. Now, works contract is a big contract. It's a large contracts running into many months. And if rate changes in between, in fact, there was a major change on 1st January 2022. Within 6-7 months, another major change. And contracts which we are talking about runs into 3 years, 5 years, 10 years type of contracts. rate change happened, question arises whether we should charge old rate or new rate. And for that, we will have to refer to section 14. There are 2 by 3 conditions. If 2 conditions are fulfilled in old rate, before rate change, then old rate will apply. If 2 conditions are fulfilled post rate change, then new rate will apply. And a lot of documentation taxpayer will have to maintain, because today what rate we are charging, it will be questioned 4 years down the line. And you might not be having adequate documentation to prove that yes, that on 17th of July rate was 12%, so I have charged 12%. And majority of this providers, service providers, are under invoicing. So backdating is not possible. And now there is again restriction 7 days backdating. So this all we need to consider, factor, and advise client. Otherwise, maybe 5 years or 4 years down the line, department may challenge that there is a misclassification and they may ask to pay balance amount. As far as exemption is concerned, most contract services, there are few exemptions from beginning. So there is entry number 10, 10A and 11 in notification number 12 by 2017. Again, a very narrow exemption. 2 exemption pertains to pure labor contracts. So entry number 10 and 11. So pure labor contracts for housing for all, urban mission, Pradhan Mantri Awas Yojana. If only labor contract, labor service is given, then it is exempt. But if it is pure labor, then gentlemen, it cannot be works contract, because there should be transfer of ownership, which will never happen. But still, HSN 9954 has been capped and exemption has been granted. One more narrow exemption for services supplied by electricity distribution utility. Exemption has been granted, not of much use. I can speak. I was just discussing continuous supply of service a minute ago. Continuous supply of service has been defined. It means supply of service which is provided or agreed to be provided continuously on a recurrent basis. This is hard. There should be continuous or recurrent basis supply backed by contract, and that contract should run more than 3 months. And since it's a long contract, obviously there will be periodic payment obligation, otherwise supplier cannot provide services. And this also includes certain notified contracts. So when we are doing auditing, monthly auditing of a bank, it's a continuous supply of service. General auditing also is continuous supply of service. We carry out service for a period of 12 months on a regular basis. If obligations are fixed every month, then it will fulfill that condition of continuous supply of service. Friends, my understanding says generally works contract services will qualify as continuous supply of service, except very small works contract services of repair, etc., which gets over in less than 3 months. Otherwise, it is continuous supply of service. Now, why we are discussing continuous supply of service? Because for continuous supply of service, there is a special subsection giving some guidelines on time limit to raise invoice. So general guidelines as per Rule 47, in case of service, provider should raise invoice within 30 days. However, banks, etc., they have got time limit of 45 days. But in case of continuous supply of service, Section 31(5) says, if from contract due date of payment is ascertainable, then invoice should be raised on or before due date. If due date is not ascertainable, then invoice should be raised on or before receipt of payment. And third, where payment is linked to completion of event. So milestone based. Invoice should be issued on or before date of completion of that event. So generally, this will be the relevant clause. However, this or this may also apply. So depending upon situation, service provider will have to raise invoice. And that will decide my time of supply. Before that, you must be aware, in this industry, there is a concept of RA bill, that is running account bill. Because it's a big contract and supplier cannot wait to fulfill entire contract to raise final invoice. So they will raise invoice in piecemeal. And that piecemeal invoice is called RA bill. Now let us come to time of supply, because unless there is time of supply, there is no question of any liability payment. So as a supplier, I need to see when my liability will arise. And that will be guided by section 13.2. 13.2 says, if invoice is raised within time limit given under section 31.5, that is this time limit. In that situation, I am supposed to pay when, as per time of supply, and the time of supply will be date of issue of invoice or date of receipt of payment, whichever is earlier. But if I'm not complying and if I'm not issuing within that time limit, then instead of issue of invoice, I will be required to pay on date of provision of service or date of receipt of payment, whichever is earlier. So friends, the moment service is rendered, I'm not supposed to raise invoice. I have got my time limit, 30 days, 45 days. Nobody expects me to sign audit report today itself and raise invoice also. I may be waiting for certain more clarification from management. I might be waiting to file income tax return, just to give an example. Till that time, I have got some time limit. If I'm raising invoice within that time limit, then I will get some extra time to pay my tax. If I'm violating, then my time limit will be triggered very early. My time of supply will be triggered. I may have to pay tax early. There is a schedule situation also. Excuse me. If we are not falling under this or this, then date on which recipient shows receipt of service in his books, that will be time of supply, and accordingly supplier will be required to pay tax. So friends, time of supply is not a big issue. It's a normal provision. Valuation. Valuation as far as works contract service is concerned, again, not a big problem. If in works contract there is transfer of property in land, that is in the case of builder, etc., there will be 1/3 deduction, and on 2/3 you will have to pay tax. In other contracts where there is no transfer of land, valuation will be as per section 15. If recipient and supplier is not related, then whatever value mentioned in invoice will become transaction value and tax will be paid on that value. However, if supplier and recipient are related, then we will have to go to valuation rule, and we may have to work out open market value or cost plus 10, etc. And when we have to pay tax on that valuation. Friends, we must be aware of Bhayana Builders case. Maybe for quality consideration, or maybe because we are getting some products at a cheaper rate if we purchase directly. Many times, recipient procure certain goods and use free of charge to supplier of works contract service. And question arises, what will be valuation in a case of free of charge supply? And this issue is arising because section 15.2b says value of supply shall include any amount that supplier is liable to pay, but which has been incurred by recipient and therefore not included in invoicing amount. So let us see this graphically. Free of charge supply, two possibilities. Supplier was liable to procure, but recipient has provided such goods on free of charge basis. That's why supplier has not raised invoice for that goods, though contractually he was supposed to raise invoice for that goods. Therefore, there is an artificial deflation of invoice, and to that extent, value of free of charge supply will have to be added back for the limited purpose of GST valuation and GST liability. However, in a second situation where supplier was not liable to procure, it was always responsibility of recipient. In that situation, otherwise also contract value was without considering those free of charge material, and therefore there is no question of any addition to the valuation to arrive at GST liability. Let's come to pressure supply. Now, friends, pressure supply is very easy in case of works contract. For domestic works contract as well as cross-border works contract, pressure supply will be placed where immovable property is located or intended to be located. If the property is not in existence, if it will come in future, then even that place. So take a case. Your client is constructing highway between, say, Mumbai to Ahmedabad. So that highway will run through two states. So from Mumbai to up to Dahanu, it's a Maharashtra. From the Dahanu onwards, it is Gujarat. So if construction is carried out in state of Maharashtra, POS will be Maharashtra. For Gujarat, POS will be Gujarat. Accordingly, taxes will have to be levied. If time permits, we will see whether in such situation, supplier needs to take registration in all the respective states, or he can operate from single registration also. This is cross-border. It's one important topic, liquidated damages. Now this LD is very peculiar in this industry. Since this contract is a big contract and time and quality is essential, generally both the parties agrees on certain terms. So if there is a delay in execution, or if there is some quality difference, quality issue, what will be the damage that is estimated in advance? This is called liquidated damages. Indian Contract Act also permits quantification of such LD in agreement. So if there is a clause of liquidated damages, and if there is some violation, if liquidated damages are either charged or recovered by supplier, there was a dispute from service tax era. We had entry similar to 5E in section 66E of service tax, Finance Act, I mean. And this actually entry reads, agreeing to obligation to refrain from an act, or to tolerate an act or situation, or to do an act, shall be treated as supply of service. This is coming out from Schedule 2. Now we know earlier 7.1D and now 7.1A very clearly says, just because something is mentioned in Schedule 2, it does not mean supply. However, if you see advance rulings, it is all against. Fortunately, there are good rulings coming from SESTAT on this issue. And now there's a very constructive circular from board on this topic, circular 178. The question arises whether GST will be applicable on liquidated damages. Is it falling under agreeing to act or agreeing to suffer? And friends, situation is more difficult because assuming it's a government contract. So government is providing service. Will there be reverse charge? Because government will not collect. Am I supposed to pay LD under reverse charge? That was another level of dispute. Circular very correctly points out that LD cannot be said to be a consideration received for tolerating breach or non-performance of contract. Such payment do not constitute consideration for a supply and are not taxable. Obviously, in commercial world, no one agrees to suffer. It's a commercial contract. However, department was taking this stand since 2012. Further, the circular says further payments such as LD, forfeiture, etc. are not consideration for tolerating act or situation. So as per this clarification, there cannot be any GST levy on LD. So it's a very good clarification. Industry has appreciated this clarification. Let us now go to next issue. We have seen time of supply. Time of supply will be generally date of issue of invoice or date of receipt of payment, whichever is earlier. Friends, in such a big contract, a gigantic contract, humongous contract of supplier will not start work without mobilization advance. Supplier is ready to pay, is ready to give guarantee to the recipient. They generally give bank guarantee, but they do collect advance, and that advance is called mobilization advance. Without this advance, how can supplier procure machinery and resources in time? So question arises whether GST is payable on mobilization advance. It's another big issue. If we simply go by section 13, a view comes that yes, once there is advance, they will have to pay GST. However, if you see judgment of SESTAT in the case of Gammon India, SESTAT says this mobilization advance is not towards provision of taxable service, and that's why it is not taxable. There are two contrary advance rulings in GST regime. In case of Siemens, West Bengal AAR says that mobilization advance of past regime, that is received up to 30th June 2017, will be presumed as advance received on 1st July 2017, and on that day itself, GST will be levied. Whereas in case of Saporji, Palonji and Company, Tamil Nadu advance ruling says that advance received in case of past regime on which Saporji, Palonji has paid service tax, and of course there was no VAT on advance receipt. So Saporji, Palonji has just paid service tax on advance receipt, but no payment has been made towards VAT. Still, advance ruling authority says that this pertains to past period, and by virtue of section 142(11)(b), there cannot be GST liability in GST regime. So there are two contradictory rulings. Whereas SESTA ruling says that in case of mobilization advance, GST is not payable. Industry is divided. Some are paying, some are not paying. And friends, if quantum of mobilization advance is big, and if you pay that GST on that advance stage itself, and subsequently you procure a lot of inputs and input services, how will you consume those services? You paid discharge your liability in advance. Unless you have future work, that liability or that amount ITC will be accumulated in your ledger, and it is blockage of capital. It's a big issue for this industry. I will just touch base this. Let me see what is the time right now. I'm running short. Okay, fine. Friends, as per rule 56.4, for works contract, we have to maintain this 5 records separately. What are the other issues of this sector? So when I'm saying this sector means all works contract industry. So payment to vendor within 180 days. Generally, this never happens, because most of the time recipient is government, and in government payment never happens in 6 months. There is a budgeting issue and so many issues. So that's a big challenge. Payment to vendors within 180 days. In past regime, branch transfer was not taxable. However, in GST it is taxable. So there is additional flow, additional blockage of working capital. One more issue, interest rate movement of goods like rigs, tools, cranes. These are requirement of this industry. Now, how can works contract industry will survive without crane? So if cranes are purchased in Mumbai, and if some contract is issued, say in Gujarat, then cranes will move from Mumbai to Gujarat. Now, Gujarat unit and Mumbai unit are distinct person. Schedule 1, entry number 2, deemed supply, read with section 71C. And if you see circular 21, circular 21 very clearly says, if this movement from Mumbai to Gujarat is not in the course or furtherance of such supply, that is for repair, maintenance, etc. If it is not for this purpose, then it is supply, and therefore GST will be payable. So Mumbai unit will have to charge higher charges on Gujarat unit. So again, blockage. Generally, many people takes Pan India registration. If it is taken, then there is an issue of cross charge. And again, a big question, whether salary cost of employee should be cross charged. That's another $1 million question. You may say, no problem, I will do cross charge on an ad hoc amount. But friends, what if recipient is not eligible for full ITC? There are many works contract industries like power, like road, which you will see now. Recipient is not eligible for full ITC, and therefore you cannot take shelter of second proviso to rule 28. You can't do ad hoc. Whatever value you are putting, that will not be allowed as transaction value. In that situation, you may have to work out cost plus 10 or open market value, etc. And there will be a ITC loss. If you are dealing with government recipient, contract value exceeds 2.5 lakh rupees, then there will be 2% TDS, which will definitely appear in your ledger, but it's another compliance. One big question, whether a works contract service provider should take registration in all state in which he is providing supply. So this issue is on since 2017. And answer to this question depends upon whether what that transaction, what that supply, supplier is having fixed establishment at that place. We know POS will be place where this immovable property is located, place where road is constructed, place where godown is being constructed. So is there a fixed establishment happening there? And fixed establishment has been defined. There is a but there is a sufficiency of people, resource, etc. Then it is fixed establishment. So depending upon facts, if I'm constructing bridge, say in Gujarat, and this construction will take 2, 3, 4 years, 5 years maybe. Many of my people are staying there. My goods are moving from here to there. In that situation, taking registration is advisable because a lot of ITC otherwise will be lost. But if it's a small contract where everything is, everything is constructed or fabricated here in Maharashtra, and there I'm just installing, contract is going to get over in a reasonable time of 3 months to 6 months, then one can always say that there is no fixed establishment in that state, and that's why I need not take registration from registration at that place. I'm providing service from Mumbai itself. However, there will be some ITC loss, but you will have to weigh pros and cons. There is loss of ITC vis-a-vis headache of cross charge, etc. So, friends, this was the issue of works contract. Coming to infra sector and power sector, I will be having another 10 minutes. Dandekar sir, I will take your 10 minutes more. Okay, so I think sir is not there. Anyway, so infra.
No problem. No problem.
Thank you, sir. I will just run through these two sectors. So, friends, everyone will agree, as far as infra is concerned, India is galloping ahead. And one reason for this good development in infra sector is because there is public-private partnership. NHAI as well as state highway authorities are doing wonderful job. And there are consortium who are putting good money for constructing road. Now, if you see this sector, there are predominantly 3 models. These are not prototype compartments. Some variation is allowed, but broadly these are 3 models. First model, EPC model. Second model, BOT model. And third model is HAM model. Liability as well as ITC under this 3 model differs significantly. So let us understand what are these models and how liability will be arrived. So in EPC model, that is engineering, procurement and construction model. It's a very old model where concessionaire or contractor is just providing construction facility. Contractor is just constructing road. Road belongs to government, NHAI. Even rights to collect tolls, etc. belongs to NHAI. And contractor merely gets its charges. This is very simple. Since works contractor is availing works contract services for further supply, there is no question of ITC blocking. And now these services are subject to 18% GST. No 12% this thing benefit. Very simple. BOT model, that is build, operate and transfer. So technically in this model, NHAI or highway authorities are the owner of the road. However, this project is financed by private players. So there is a consortium, maybe some bank and works contractor. They will form a consortium and they will carry out entire project. Concessionaire will be responsible for construction as well as operation and maintenance. In return, if it is BOT toll model, in BOT also there are 2 models, BOT toll, BOT NUT. If it is BOT toll model, then generally concessionaire will get right to collect toll for next 30 years. And on completion of 30 years, these roads will be transferred. It's a constructive transfer to NHAI, and then concessionaire will no longer have any rights to collect toll. If it is annuity model, then instead of toll collection rights, government or NHAI will pay annuity to the contractor. For the time being, we are not discussing BOT annuity model. Let us focus on BOT toll model. So in this toll model, there is exemption entry, serial number 23 of notification number 12, CTR. As per this entry, services provided by private payer by way of access to a road or a bridge on payment of toll charges exempt from GST. So whatever toll they are collecting, it is exempt from GST. And if their outward supply is exempt, of course, there is no question of ITC. So this is very simple. BOT toll model, no ITC, no GST. We will see BOT annuity model subsequently. Let us focus on HAM model, that is hybrid model. Hybrid model lies between EPC and BOT. So in BOT, this road contractor gets its revenue in period of say 30 years. Just to incentivize contractors, HAM model has been introduced. Here, certain portion is paid to concessionaire as per milestone. Say 40% is paid as per milestone, and 60% will be paid over in form of annuity over a period of say 7 to 15 years, so that concessionaire gets their money quickly, and that's why this model is very popular nowadays. So here also we are getting annuity. Even in BOT annuity model, we are getting annuity. Both are at same level. Whatever we are discussing for HAM, some portion will be applicable even to BOT annuity model. So in HAM, there are two phases. One is called construction phase. Another is called operation and maintenance phase. Now entry number 23A, we have seen just now. As per this entry, service by way of access to road or bridge on payment of annuity is exempt. So industry took a view that whatever annuity they're getting from NHAI or highway authorities, it is exempt. And why they have taken this view? Because if you see minutes of 23rd GST Council meeting, it was giving impression that annuity is exempt. Subsequently, when notification was issued, notification was saying something else. It was a restrictive notification, whereas minutes were saying something else. So industry was confused. Question was raised, and after almost 4 years, CBIC has issued circular number 150. CBIC says that in case of HAM model, there are two phases: construction phase and operation and maintenance phase. For construction phase, consideration is paid in that phase itself, and that consideration is taxable under HSN 9954, that is works contract service. However, whatever annuity is given by NHAI during operation and maintenance phase will be exempt by entry number 23A. Now, this was a big shocker for industry, because industry was, why on industry? Even NHAI was having a view that entire amount paid, whether under this phase or that phase, was exempt. So this has created a lot of issue in the industry. This was challenged before Karnataka High Court in the case of DPJ bidder Chincholi Annuity Road Project Private Limited. Petitioner took a view that annuity is nothing but payment in lieu of toll charges. This circular is going beyond notification. Notification doesn't say that whatever is collected during concession phase is taxable. That's why Karnataka High Court said, yes, circular cannot override notification. And therefore, High Court said that entire consideration is exempt from GST, whether received during construction phase or operation and maintenance phase. However, Karnataka High Court has given a remark that if government wants to make some changes in notification number 12, entry number 23A, they are free to do this. They can make changes. So immediately, there was a 49th GST Council meeting. Notification number 15 by 2022 CTR was issued. And by this notification, entry number 23A, which was granting exemption to NUT, has been removed. That removal is from 1st January 2023. So just understand what has happened. 22nd GST Council meeting, entry was inserted, 23A. Industry was of the view that NUT is exempt. After 45th GST Council meeting, Circular 150 was issued, where board has taken some contrary. Matter went to High Court. High Court gave a view in favor of taxpayer. 40th GST Council meeting, that entry itself has been deleted. Now, where does all leads to? इससे क्या होगा? Unfortunately, from 1st January 2023, NUT, whether under HAM model or BOT model, is taxable 12% GST. What will happen for NUT received between 13th October to 31st December, 13th October 2017 to 31st December 2022? Nobody knows. Because High Court says that circular is going beyond notification, but that is binding only in case of Karnataka. Mumbai authority can certainly say that I will disregard that judgment. I mean, I will go by circular, which is binding on me. There is a dispute here. If you ask me honestly, industry is now worried that entry number 23A has removed. What will happen to entry number 23? Whether it will be removed in future, whether toll charges which they are collecting and not paying any GST, assuming this is exempt, is it really exempt? Or government maybe 2 years down the line will come out with a circular saying, sorry, it is taxable. So industry right now is struggling with all these issues. In fact, for almost 4 years, they have suffered and continue to suffer. Friends, again, this industry deals with NHAI, highway authorities, and their contracts are drafted in such a manner that unless authorities agrees that this change in law, they will not pay additional amount. It is very easy to say that it is taxable from this day. But what will happen to my corresponding ITC? 16(4) will not allow me to revive those ITCs. So ITC has gone, liability has brought in. I hope we understand pain of this industry. And that is the intention of this series, that we know GST law, but we should also know GST law sector-wise. So 16(4) is a big issue for this industry. Let me quickly touch power sector. Friends, power sector, again, we are deficient in power. Even today, many places there is no 24-hour electricity. And so there is a push to increase production of power, generation of power, distribution of power. However, if you see GST notifications, you may think otherwise. This thermal power plant, they need coal. It's one of their basic material. However, it's a dead loss because electricity is a goods, and as a goods, it is exempt by notification number 2 by 2017. This electricity distribution utilities, these companies, when they distribute electricity, again, it is exempt service by way of notification number 12. If you see Torrent Power judgment, Gujarat High Court, it says there cannot be any GST liability on additional charges like meter charges, etc. also. So all in all, it is an exempt sector. However, if you set up such a big plant, you will agree it is immovable property, and therefore supplier will charge 18% GST. Outward supply being exempt, entire input tax is a loss to me. Let's touch base solar power industry. Even this industry has suffered like anything.
Sir, other speaker is there, so just try to complete fast.
Yeah, just 2 minutes. I will close in next 2 minutes. Just 2 minutes.
Yeah.
So solar power industry. Friends, if you see notification, rate notification, schedule 1, entry number 234, up to 30th September 2021, solar power generating system was subject to 5% rate. Subsequently, government came out with an explanation with effect from 1st January 2019. As per this notification, as per this explanation, if solar power generating system, that is goods, is supplied along with installation facility, means goods plus service, then GST is payable in a bifurcated manner. That is 70% is goods, 30% is service, and so applicable GST liability will be 8.9%. Now, friends, whether we go by composite supply, whether we go by dominant intention, or whether we go by works contract definition, either it can be 18% or it can be 5%. It cannot be 8.9%. The government was trying to minimize the liability because there are controversial advance ruling which says there is installation in the SPGS, so it is 18%. Government has tried to find a midway by saying we are reducing liability to 8.9%, and industry is saying it is 5%. Subsequently, from 1st November 2021, 1st October 2021, there is a change in tariff. This entry is removed from Schedule 1 and inserted to Schedule 2. Entry number 201A, sorry. Similar entry, similar explanation, rate increase to 12%. So now, rate is 13.8%. My last slide. CBSE circular, this is the actual image of solar power plant. And if you see, it is nothing but solar power panel. This is solar panel. There will be some inverter, there will be some controller, and there will be some structure. But mainly it is solar power panel, which is subject to 12% tax. However, department is saying solar power generating system is subject to different rate of tax. And there's a dispute. Further, Circular 163 says that this explanation, which was added with effect from 1st January 2019, if taxpayer wants, they can treat this explanation as with effect from 1st July 2017, That is, their liability will reduce to 8.9% from 1st July 2017. However, if somebody has paid higher tax of 18%, it will not be refunded. This is what Circular 163 says. Circular says you treat this explanation as retrospective explanation. Friends, as on day, this matter is before Andhra Pradesh High Court. This explanation has been challenged by the petitioner, saying that this explanation in old entry or new entry is against the concept of composite supply and also against rule-making power under Section 15 of the Act. So this split has been challenged on 2 counts. Notice has been issued to government. We don't know what will happen. High Court may say it is works contract, 18%. High Court may say this split is proper, so 8.9% or 13.8% as the case may be. Or High Court may say it is 5% earlier and 12% now. So I will end my session with a parody. Shah Rukh Khan always says, "Picture bhi baki hai mere dost." I will say, "Sir, litigation bhi baki hai mere dost." Thank you very much. I'm extremely sorry for taking some more time, Dandekar sir. Sorry for this.
Jignesh bhai, you have done your presentation was very excellent, and after listening to your presentation, I guess most of the doubts of the participants as far as works contract is concerned must have been solved, and this will surely help them in their day-to-day practice. So with this, I propose you a hearty vote of thanks on behalf of WRC of ICAI. Thank you very much, Jignesh bhai, for your very nice presentation with explanation in very simple language. And hope to see you again in WRC for such future meetings again as a faculty. Thank you so much, Jignesh bhai.
Thank you, sir. Thank you.
Thank you. Yeah. Now, without wasting much time, I will just introduce our today's next speaker, Mr. CA Sunil Dandekar, sir. And he is going to address us on NGOs, trusts, cooperative societies, IT and software industry as far as GST is concerned. And to introduce him, Sunil sir has passed his chartered accountancy in the year 1983. And he is practicing for last 40 years in traditional practice of audit, income tax, GST, VAT, and service tax. Presently, he is acting as a founder partner of Sharps and Associates Chartered Accountant, having presence all over Maharashtra. He was associated with Maharashtra VAT Department during the automation of VAT returns and VAT audit forms. With this short introduction, I would request everybody that please have a patient hearing. The presentation of the Sunil sir would be very good, because as he is having a experience of 40 years, which is more than my age. So I would request CA Sunil sir, please you may start your presentation, sir. The floor is yours.
Thank you, sir. I firstly thank you, WRC, for giving me opportunity. Without because there will be a short time, so I will just start sharing the presentation. Basically, the topic given is the NGO trust and cooperative societies and the GST applicability and taxability. To start with, first, applicability of the GST is basically on a supply and doesn't differ whether who is the provider of the service. So whether services are provided by NGO, trust, or cooperative society, the basic law that it is taxable on supplies of goods or services remains the same. So basic applicability, basic law is it should be a supply, and supply means any person carrying supply includes all form of supply, sale, purchase, sales, transfer, barter, everything for a consideration by a person for furtherance of business. Activities or transaction by person to its members are also covered by way of introduction of subsection 1 AA in section 7 in 2022 with mandatory effect from 1st July 2017. So the particular dispute regarding whether members and trust or members or NGO members and societies are same persons, mutuality concept, everything has been overruled by introduction of this particular section or the subsection. So basically, whether a supply is made, once supply is made, it is taxable. Particular situation in the case of NGO, trust or society, we need to check whether it's a supply first. If supply condition is fulfilled, then naturally it is taxable. Then we can go to the exemptions, whether any specific exemptions has been provided for this type of particular assessees. In the case of whether to decide as a supply or not, a person, they have specifically included cooperative societies, registered, trust, any any person, all types of forms are included already in the definition person. Even in the business, they have specifically included the activities provision by club, association, society, or any such body for a subscription of the facilities or benefits to its member as a business. So whether all these types of assessees carries on a business or not, that has been covered by way of a insertion in the definition of business to say that they are carrying on a business. So by the deeming provision, they have included all types of services provided by these types of assessees as a business. The main consideration will be whether there is a consideration to decide whether it's a supply or not. There has to be a consideration for that. Now, as you have seen that under 7.1 AA, they have treated as two different persons. Society or club and members are treated as two different persons. And it is treated as club is providing services to members. And the consideration is the whatever is paid by the members to the society. So if there is a consideration, any payment made in money or by way of any act is treated as a consideration, except any subsidy given by the central government or state government. All other things of payments are covered under the consideration part. Now, particularly in the case of NGOs, one particular situation may arise that for the activities of NGO, central government may fund the NGOs to carry out such activities. The question arose whether these types of payments made by central government or state government will constitute as a consideration for supply of services, where services have been provided to third party, not to the government, but government is funding them. So there was a AR in the case of Jaishankar Gramin and Adivasi Vikas Sanstha, Maharashtra AAR, which has created a lot of issues in saying earlier AR had decided that the services which are not in charitable activities will be taxable, and accordingly the grants given by the government will also become taxable. But while going against this AR, when appeal is filed, AAR has said that the amount which is paid by the government for these activities to be carried out, these activities are for general public and for overall community. So it should be treated as subsidy. And because it is treated as subsidy, there is no consideration. And because of that, no supply. So question of charitable purpose, etc., was not at all discussed in AAAR. But on the basis of there is lack of consideration, this particular activity carried out by Vikas Samstha was treated as not a supply. The main purpose they have considered is for the welfare of this destitute woman, serving the mankind in general. So government is giving fixed sum for providing these services. So it should not be treated as a consideration, but it should be treated in the form of subsidy. So once it is a subsidy, it is not a part of consideration. And then accordingly, these particular services provided by this samstha are not supply. It's a very typical AR, triple AR judgment. And this is particularly for when government is funding, because services are not provided to the government. Services are provided to the persons, affected persons, and other people. But the consideration is given by government. And here, consideration definition says that consideration can be paid by the person who receives the service or by any other person. So that particular scenario, this was discussed, but they have considered it as a subsidy, and thus not tax. Supply is not there. Another way of collecting the funds in the case of NGO or trust is donation. There are not many judgments which says that donation is not for any service provided by the trust or NGO or society. In the same AR, in the same case, AR has specifically mentioned this. What are the three conditions to be not taxable? Three conditions will be: the gift or donation is made to a charitable organization, payment has a character of gift or donation, and the purpose lead to no commercial gain or not an advertisement. So if these three conditions are fulfilled, then GST is not leviable on the donation part. Say, if you give a donation to somebody and you ask that somebody's name or my relative name is to be given or displayed, then it amounts to a consideration. Then it will be liable for taxation, liable for GST. It's in the form of advertisement. So main condition is there should not be any expectation against the donation given. Then it is not taxable. It has been decided in lot many cases that if such things, there are no expectations against this particular donation, then these donations are not liable for GST. So once on these two basic chargeability sections are covered, that whether it is chargeable as a supply first, because it has to be supply, then only all other provisions will apply. So in the case of supply, these two main conditions, donations are, if it is not against any consideration, then it is not taxable. Similarly, if subsidy is received for providing any services, that is also not taxable. So it's not a supply. Once it is, if it is treated as a supply, then the question arises to whether GST will be payable. So in the case of NGO, trust or societies, what we have to see, is there any exemptions granted to these particular institutions, even though the services provided are treated as supply under section 7. So in the case of charitable trust, there are few exemption notifications has been issued. The first exemption notification is notification number 12 of 2017, central tax rate. Entry number 1 says that services by any entity registered under section 12AA or 12AB of charitable activities will be exempt. Main condition is that entity should be registered under 12AA or 12AB of Income Tax Act. That is a prime condition. If it is not registered under these particular sections, or say registered under 1023C, but not under 12AA, then even though activities are charitable activities, this exemption will not be available to them. Now, when you consider charitable activities as far as income tax is concerned, definition given in GST is very restricted. Definition has been given in the same notification under definition part, para 2. It says that charitable activity means activity relating to. So it's an exhaustive definition. There is no chance of interpreting anything. Whatever is stated in this definition is only charitable purpose. So if your activity is fitted in this particular definition, then only you are exempted, otherwise you are taxable. There are 4 links to this particular definition. One is public health by way of care or counseling, not of all the people, of terminally ill people or persons with severe physical or mental disability, persons affected with HIV or AIDS, or person addicted to dependence forming substance such as narcotics drugs. So only if it is in relation to care or counseling of such type of people, then only it is covered under public health. And second is public awareness regarding the prevention, health, family planning, or prevention of health. So only this type of health services are covered under charitable purpose. Second is advancement of religion, spirituality, or yoga. Advancement of religion or spirituality or yoga. So only this particular part is covered. Third one is advancement of education program or skill development relating to. This is also for a specified set of people. Abandoned, orphaned, or homeless children, physically or mentally abused or traumatized persons, prisoners, or persons over the age of 65 years residing in rural area. If education program or skill development programs are carried out in relation to this type of people, then only it is qualified as a charitable activity. Fourth one is preservation of environment, including watershed, forest, and wildlife. Now, as you can see, this is an inclusive, this is a exhaustive definition. So only these types of services are covered under charitable activities, which are entitled for exemption under entry number 1. There are few AAR. In the case of World Researcher Association, Madhya Pradesh AAR, they have also clarified the definition of charitable activity is not an inclusive definition, but an exclusive, meaning the specific activity which are treated to be falling under charitable activities are an exhaustive list, and there is no scope of interpretation as to which activity might fall under charitable. So it is only the activities which has been mentioned there are qualified as a charitable activity. Another case regarding the Children of the World India Trust. This is Maharashtra AR. This particular case is regarding adoption fee received for the adoption under the enactment. This particular judgment have said that this particular activity for taking care of the abandoned, orphaned, or homeless children and adoption of such children will fall under the educational activity and the thirdly, education program or skill development relating to these children. And accordingly, this particular adoption fee will not be liable to GST. It will be treated as a charitable activity. There is another judgment, Gujarat AR Vikas Center for Development, that benefit of plantation of mangroves along coastal will fall under the fourth limb, that is regarding environment, preservation of environment, including watershed, forest, and wildlife. So that will fall under that particular activity, and it will be exempt. Similarly, All India Disaster Mitigation Institute AR Gujarat also said that disaster prevention, disaster mitigation, and disaster management are activity relating to preservation of environment, and thus it will be charitable activities and thus not liable under GST. Provided for all these types of services, 12AA and 12AB registration is mandatory to get this particular exemption. Another entry is entry number 9D, services by old age home run by central government, state government, or an entity registered under 12A or 12B to the resident aged 16 years or more against a consideration up to 25,000 rupees per month per member will be exempt. So if the old age home is run by institution registered under 12A, 12B and not charging more than 25,000 rupees per month, including charges for boarding, lodging, and maintenance. So there cannot be separate charges for the same. All inclusive price is provided. Another entry is entry number 13. Services by a person by way of conduct of any religious ceremony. If you carry out any religious ceremony, that is exempt. Here, the registration under 12A, 12B or charitable trust or anybody is not important. Any person conducting any religious ceremony, it is exempt from GST. Renting of precinct or of a religious place meant for general public, owned and managed by entity registered under charitable trust, registered under 12A, 12B, or a trust issued registered under 1023C5, or a body of authority under 1023BBA. This is also exempt provided there is a restriction on the rent amount which these institutes can charge. Regarding renting, it will be exempt if rooms are rented, then charges should not exceed 1,000 rupees or more per year. If renting of premises, community halls, Kalyan Mandalam or open area, then charges should not exceed 10,000 rupees or more. It should not exceed 10,000, it should not exceed 1,000. Renting of shops, because in religious places you can see that even the shops are given on the rent. So if renting of shops or business places are given, then also charges should not be more than 10,000 or more. If it is 10,000 rupees, then it is taxable. It has to be less than 10,000 rupees. There is another entry, 74A, which says that services provided by rehabilitation professionals recognized under Rehabilitation Council by way of rehabilitation, therapy or counseling and such other activities at medical establishment, educational institution, rehabilitation centers established by central government, state government, union territory or an entity registered under 12A, 12B. So if you are NGO or any trust is having a medical establishment, educational institution, and such counseling rehabilitation is carried out, and for that services are provided by rehabilitation professionals recognized by the government, then that are also exempt from the GST. Another entry is 77A. Services provided by unincorporated body or a non-profit entity. Activities relating to welfare of industrial or agricultural labor or farmers, or promotion of trade, commerce, industry, agriculture, art, science, etc. to its own member, provided their membership fee should not be more than 1,000 rupees per year per member. So if such type of associations are there, then on their services, it is not taxable. Entry number 80, services by way of training or coaching in recreational activities relating to arts or culture by an individual. Here the NGO or charitable trust or associations are not covered as far as arts and culture is concerned. Sports by charitable entities registered under 12 at 12B, it will be exempt, but only in relation to sports. There is one case, AR of Maharashtra, in the case of New Mumbai Sports Association, where they have specified that football, basketball, athletic, cricket, swimming, karate are sports. Dance will be covered under arts. Physical fitness can neither be considered as a sports nor arts or culture, so it will be taxable. Further, the term summer coaching is general term which cannot be said to cover sports, arts or culture, so that is also taxable. So it's only in relation to sports, then only it is exempt for entities who are registered under 12AA or 12BB. There is one exemption under IGST. This is notification number 9, IGST rate. When such type of entity receives any services from the persons who are located in non-taxable territory, they are also exempt. So naturally, RCM is not supposed to be payable by them on such type of things, because as services provided from non-taxable territory are liable under RCM. However, this exemption will not apply to online information and database access, as well as transportation of goods from outside to Indian port. These two services are not covered under this exemption. Otherwise, all services are covered. These are all entries number are relating to services, either notification number 12 or notification number 9. In respect of goods, notification number 2 by 2017 Central State Tax, there are also 3 exemptions are given. Entry number 98 says that prasadam supplied by religious places like temples, mosque, church, gurudwaras, that will be exempt. No GST will be payable. Similarly, entry number 148 says that puja samagri such as Rudraksha mala, Tulsi Kanti mala, Yagno Pavitra, that is thread, wooden thadu, Panchamrit, which they have listed out: Vibhuti, unbranded honey, wick for diya, Roli, Kalwa, Chandan Tika. They are specifically exempted under entry number 148. But only these items are, all other puja saitya is taxable. There is one entry called 119, which says printed books. Now, in one of the AR, printed books also includes the religious books printed, and they have granted exemption under this particular entry, saying that they are also printed books. There is no specific mention that it cannot be religious or so. Printed books also cover religious books sold by a religious trust or anybody. There will be exempt, provided it is printed books. These are basic exemptions. Now, these particular all types of such assets can carry out in multiple services. They may be in providing educational services or medical services. So any exemption provided for that particular specific activities will also be covered, applicable to these particular agencies. I have not covered that because they are specifically in relation to certain other businesses to be carried out, for which separate provisions are there and separate lectures are arranged. These are only in relation to charitable trust exemptions. If they are carrying out educational activities, they have exemptions provided in notification number 12 for services provided, education, medical, healthcare. So that all will apply. So this is only in short pertaining to charitable activities which are not covered under any specific sector. Then the question comes, what will be the registration criteria? Registration criteria will be the same for all if it is exceeding 20 lakhs of rupees, whose aggregate turnover exceeds 20 lakhs of rupees. It will be needs to take registration subject to certain exceptions. Now, what is aggregate turnover? Aggregate turnover includes exam services also. So if you are making taxable and exam service, you have to calculate aggregate turnover in toto, considering exam service also. So 20 lakhs turnover has to be counted considering exam supplies. In the case of charitable trust or NGO or society, basically they are providing services in majority. So 40 lakhs limit will not be applicable because that is specifically granted only to the persons who are dealing in goods. So 40 lakhs limit I have not considered. It will be 20 lakhs rupees. If it is exceeding 20 lakhs, you need to register, with one exception. If they are exclusively engaged in services which are not liable to tax or which are wholly exempt, then they need not register. Important condition is exclusively engaged. So even a single rupee taxable sale will make them liable for registration. Now for NGO or trust, this condition may be fulfilled that they are exclusively in exempt services. As far as society part is concerned, particularly cooperative housing societies, this particular exemption, I don't think it will be helpful to cooperative societies, because even though there is an exemption for cooperative societies, depending on the quantum of the maintenance charges collected, there will be admission fee, entrance fee, or nomination fee, or sale of scrap, that all are taxable services. So in a year, even if one admission or one member is added to membership clubs or society, that 10 rupee or 100 rupee or 1000 rupee will be taxable, and you cannot say that it is exclusively engaged. So if your total collection is more than 20 lakhs, you need to register. Exclusive may not be helpful for particularly for societies, cooperative housing societies. Another is, if it is not exempt, you are liable for registration. You need to take registration. But if your turnover is below, but you are liable to pay RCM under section 24, then whether you are required to take registration. There is a section 24 which says that irrespective of your turnover, if you are liable to pay RCM or other activities, there are around 30 to 14 items in section 24. If you are falling under any of them, you need to take registration even if your turnover is below 20 lakhs. A question arose whether 23, if I'm not liable under 23 because I'm exclusively in exam supply, whether because of 24 I'm required to take registration. Earlier there were judgments to say that 24 will override, particularly Jalaram Feeds, this is the AR of Maharashtra of 2019, which has given that 24 is override 23. Now they have made an amendment in Finance Act 2023 in section 23 to say that it will override 24 also. But when enacting Finance Act, overriding section 22 and 24, this provision has been shifted to subsection 2 only. Subsection 2 says that government can issue a notification exempting persons from taking registration subject to certain conditions. In that particular clause, they have amended that with notwithstanding anything contained to 22 and 24, government may issue a notification. Exclusively engaged in exam supply falls under 23(1). So for that, situation is still as prevailed earlier. So 24 will override 23 in such cases, and they need to take registration. Now, for this NGO trust and societies, main clause under section 24 which will be liable is persons who are required to pay tax under reverse charge. There are certain items notified under notification number 30, which specifies the services on which RCM is payable, and some of the services which are normally covered by this institution will be supply of GTA, Goods Transport Agency, for transportation of goods by road, services supplied by way of legal services, services supplied by central, state government, union territory. These are liable for RCM. So if any of these services are availed by these particular institutions, then you are liable to pay tax under RCM. And if you are liable to pay tax under RCM, you need to take registration even if your turnover doesn't exceed 20 lakhs. The two services which are mentioned below, that is services supplied by central and state government of renting of immovable property, the condition is renting of immovable property to a registered person. So if you are unregistered and you are using this service, RCM is not applicable. So under this clause, you need not register. Another is services provided by supply of security person to a registered person. So again, here the condition is services supplied to a registered person. So if it is supplied to unregistered person, RCM is not payable. So naturally, you need not register under because of 24. But the first three one, GTA services, legal services, and the services taken from central or state government. These three services, if any association or trust or NGO is availing, then you are liable to pay tax under RCM, and consequently, you are required to take registration even if your turnover doesn't exceed 20 lakhs of rupees. In all these three, the important thing is there are exemptions provided for such type of services in notification number 12. So naturally, if exemption is provided, naturally RCM is also not payable, then you need not register. So while applying these particular three sections, clauses, exemptions need to be seen whether it is fall under exemption, then RCM is not payable. In the case of GTA, if the services provided by GTA consideration is not exceeding 750 rupees, then it is exempt under entry number 21. Another is 21A, which says that GTA services provided to unregistered persons will be exempt, except services provided to any cooperative society, any society registered under Societies Act, or body corporate. So for cooperative societies, this exemption may not be helpful. But if NGO and trust are not covered by these three categories, then they will be exempted. Being unregistered person, RCM is not payable. In the case of legal services, there is also an exemption under 45B that legal services to business entities whose aggregate turnover in the previous year doesn't exceed the exemption limit for registration. Earlier it was mentioned as 20 lakhs. The wording has been changed that it is eligible for exemption for registration. So if you are in the previous year, you are not liable for registration, then legal service provided to business entity is exempt. Business entity defined as who is carrying on business. So in all these types of things, NGO trust societies, because business definition includes them, their services as business, all these entities are business entities carrying on business. That is the only definition for business entity. Central and state government, there are nearly 7 to 8 entries which gives exemption for various services procured from central, state government or local authority or government entities. So that needs to be remembered while RCM applicability is checked. Basically, government or any service activity in relation to the functions entrusted under municipality under 243W of Constitution and 243G of Constitution. There are lists as Schedule 11, Schedule 12 of the Constitution, which gives list of services which are supposed to be provided by municipality or government. If they are providing that services, then it is exempt. I have just mentioned that list in the presentation, what is covered under 243 listed in 12th schedule and 243G listed in 11th schedule. These are all services which are mentioned under Constitution. So if these services are provided, tax is not there, these services are exempted. Another is renting of immobile property and other property by central or state government to an entity, business entity, whose aggregate turnover in the preceding year does not exceed 20 lakhs or in such amount make it eligible for registration. So if services are provided, renting of services provided to them, then it is exempt. Then no RCM is also payable, naturally no registration is also required. Services provided by central, state, union or local authority where consideration for service does not exceed 5,000 rupees. This is a general concession given. If charges are less than 5,000 rupees, then it is exempt. No RCM is payable or no GST is applicable. In the case of continuous supply, if any service is provided continuously, as Jignesh sir has already explained, continuous supply means under a contract for continuous more than 3 months on which periodic payment is decided. In that case, 5,000 is to be constructed not per payment, but for a financial year. So if it is less than 5,000 rupees per year, then it is exempt. Entry number 47 shows the services provided by central, state government where any registration required under for the time being enforced. So any registration fee paid to the government, no GST is applicable on that. It is exempt. So no RCM is also payable. Entry 62, it says for fines or liquidated damages is payable to the government. No GST is applicable. So before deciding registration, and particularly considering the section 24 applicability, exemptions need to be checked. If it is exempt service, then no RCM is payable under section 24. So no registration requirement is also there. So while considering, these exemptions are very important for registration. Now we come to taxability. As far as society's part is concerned, it's covered under 9995. As far as NGO trust cover, depends on what types of activities they are carrying on. And depending on that particular activity, rates will be decided. For the society, one entry is there covering 9995 as HSM, and which is including notification number 11 at serial number 33, providing for 18% tax rate. In the case of society, as you may be aware that society charge their charges under different heads. So question is whether this individual head is to be treated as separate supply, or it's a composite supply or a mixed supply, because on that basis it depends on taxability of that particular service. So what is composite supply? Composite supply is consisting of two or more taxable supplies naturally bundled with each other, and one of which is a principal supply. In the case of societies, various heads under which society charge, they are not naturally bundled, and not any one of them can be treated as a principal supply. Each one has a different criteria for charging that, so it cannot be said that it is a composite supply. Mixed supply, major condition is there has to be a single price. Now, as we have said that society will be charging under different heads, so there is no single price, so mixed supply cannot be there. So naturally, each and every supply has to be counted separately to decide taxability under the GST law. There is one exemption under serial number 77, B and C. 77 says that services by way of unincorporated body or a non-profit entity registered under any law for the time being in force to its own member by way of reimbursement of charges or share of contribution for the provision of carrying out any activity which is exempt under GST. So anything charged for exempt services will be exempt also, or up to rupees 7,500 per month per member for sourcing of goods or services from third person for common use of its member in a housing society or a residential complex. Here, important point to note that nowhere it is mentioned that it is maintenance charges. Maintenance charges wording is not used anywhere in the notification. Wording is reimbursement of charges or share of contribution for sourcing of goods or services from third party for common use of its member. If these all criteria are fulfilled, then exemption up to 7,500 will be there. There are a lot many disputes regarding if my total charges exceed 7,500, what will be the position? Various AR, AAR have decided that if it exceeds 7,500, it is taxable on the whole amount, which is also supported by Circular 109 issued by the CBIC, which has taken a view contrary to their earlier flyers that whole amount will be taxable. A judgment of Madras High Court was delivered immediately after issue of notification, which says that circular is not correct as per law. Government has gone into appeal, and then Madras High Court has stayed that single judge judgment, and right now position is as it is stayed. But important point to note here, this is the judgment, TVH Lumbini Square Owners Association single judge judgment, which has said that up to 7,500 it will be exempt. On and above whatever amount it is taxable, but which has been stayed. Important means always there is, when we discuss this particular topic, always there is a comparison with service tax, because similar notification has been issued under the service tax, giving a exemption up to 3,000 rupees at that time. But that notification 25/2012 under service tax, the wording of that particular notification and GST notification is slightly different, on a different footings. That particular point is yet to be resolved, as 25/2012 says that hereby exempt the following taxable service from whole of the service tax leviable. So this particular notification under service tax is exempting taxable service from the service tax, subject to conditions. So one of the condition is if charges are up to 3,000 rupees, it will be exempt. But they are talking about taxable service. As per as notification 12/12/2017 central tax rate concern, it says that it exempt intrastate supply of service from so much of the central tax leviable thereon as in excess of state tax calculated at the rate specified there. So they are exempting rate, they are not exempting service. So this notification says that if your charges are up to 7,500, then up to 7,500 tax above 0% will be exempted, will be ignored. So this differentiation is there in as far as when we compare service tax, and because if we put that 77 entry into this particular wording, it says that services by unincorporated body or non-profit entity registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution up to an amount of rupees 7,500 rupees per month per member for sourcing of goods or services from third party for common use of its members in a housing society or a residential complex from so much of the central tax leviable thereon under subsection 1 of 9 as is in excess of state tax calculated at nil rate. So up to 7,500 rupees, 0%, and above that, whatever applicable rate is applicable, that's what it looks like. However, all the AR and even the government is of the view that it has to be taxable on a full amount. But here the exemption is not regarding service. It's an exemption regarding tax rate. So tax rate is reduced, service is taxable. Now, when we are discussing about the composite supply or mixed supply, if we consider each and every head which normally society charge, main portion will be property or municipal tax. Nowadays, municipality has started charging to individual member. So this collection by the society is normal. Now, in future may not be there, but there will be some component of property tax regarding the property belonging to the common area, watchman cabin or your gymkhana or water pump. So regarding that, that property tax is not exempt. That collection is a contribution from the member. So it has to be included in 7,500 rupees exemption limit. So while calculating 7,500 rupees, this particular property tax, which is common in nature, not of a particular member, needs to be considered and cannot be omitted while calculating aggregate turnover as well as uh, contribution from the members. If it exceeds 7,500, at present, as per board circular, it is fully taxable. In earlier, when it was property tax was collected on behalf of members, that much portion which actually attributed to members is a type of pure agent type service. So it will not be included in aggregate turnover also. And it will not be taxable also. Because the rule 33 says that it should be excluded from the valuation if it is on the pure agent basis. These are the conditions which I have just noted. Water charges, another component in the bill. Water charges is supplied by the society to its member, and as pure water is exempt under entry number 99 as goods 2/2017. Providing of water will also be exempt as specified under entry number 77B, which says that any service provided which is exempt under GST will be exempt. So water will be exempt. There is one judgment of Maharashtra only, which says that if whatever charges you levy, if you are purifying the water in society or making any treatment plant in the society, then it's not a pure water, and then it will be taxable. So that particular, if it is any plant or any process is carried on the water provided by municipality or the government, then it's not a pure water. Entry number 99 covers only pure water. Another is electricity charges. In flyer as well as circular, it is mentioned that electricity charges, being electricity, will be exempt. But it is important to note here that society is not charging for the electricity which are provided by the government or electricity board to the members. Electricity is used by the society for providing various services to the members using that particular electricity. So it's not a provision of electricity, but it's a use of electricity for providing other services. So it cannot go under entry number 104 because it's not a provision of electricity as such. A society is not providing electricity to members. Just like water, they are not transferring that electricity from their main board to members' flats. No, they are using it for their own purpose. So it's a you can say it's an input service for the society for providing other services. So it cannot be exempt 104 entry, but it will be covered under 7,500 rupees because it's procured from third party for common use of the members. So 7,500 exemption limit for will be considered for calculating the tax on that. Another is parking charges. Now, for parking charges, unless there is a strict parking provided by the society, for which if they have procured the services of third party, then they can claim exemption under 7,500. If the parking is done in the open space of the society and they are not providing any procuring any services from the third party, then it will be fully taxable. No exemption will be granted this. And as I said, it's a separate service. Each head of the a maintenance bill has to be treated as a separate supply, as it is not a composite supply, not a mixed supply. So exemptions are also to be treated individually. So whether 77C condition, that procurement share of contribution for procurement of third party for providing this service, answer is no. So it should not be exempt, but it should be taxable. Similarly, non-occupancy charges, because non-occupancy charges is also no third party procurement is there. And also it's not for the benefit of all the members. So it is to be taxable. Delayed payment charges penalty on the same criteria, it will be taxable. In these particular three types of things, the one argument by the some of the consultants is the collection is on account of parking or NOC or this, but this is for the usage of that particular fund is for common use and for procurement of services from third party, may not be in relation to parking services or NOC. So whether there is any condition that there has to be a nexus between the two services, procurement and the provided services. If it is used for the purpose of common use and for procurement of third party, under whatever area it is collected, it will be exempt. That needs to be checked. There nowhere it is this point has come up. In each and every AR, mention of maintenance charges is mentioned, and there are AR issued in 2021 also, saying that if maintenance, monthly maintenance is below 7,500, it will be exempt in toto without going into individual head. But this needs to be checked whether it has to be treated, exemption has to be treated individually, or because maintenance word is not there in anywhere in the notification. Another is late payment charges. Late payment charges collected by the society will be taxable as value of the supply includes interest and late payment as per section 15(2)(d). Here the question arose is, section 13(6) says that time of supply in relation to interest will be the actual receipt of the interest or late payment charges. Now, if it includes in the value of supply, interest will be charged in the subsequent months. So if by adding that charges, if it goes beyond 7,500 rupees, my original charges was say 7,000 rupees, interest debit is 1,000 rupees. And because of that, my now total goes to 8,000 rupees, whether I have to pay on the whole amount due to interest, because my total consideration exceeds 7,500 rupees. Other charges includes admission fee, transfer fee, nomination or nomination reversal fee, Xerox charges, society property usage charges, scrap sale. That all will be taxable because it doesn't fall under maintenance charges or share of contribution for all the members. Procurement of third party anything services is not there in all such type of services, so it will be totally taxable. And that's why I have said 23 will not be much of use to society. Contribution fund is another controversy, whether fund to sinking fund contribution or repair fund contribution will be taxable. There are case laws which assesses have taken a stand that it's a type of a deposit, which in AR has been ruled out, that society has no power to accept deposit. That is the first stand which AR has taken. For deposit, you need to follow the procedure to accept the deposits, and it has to be member wise. There are certain conditions to that, which is not applicable in this case. So they are not deposits. So that it's a collection for future supply. Now supply includes future supply also. So it's an advance collection for future supply, and accordingly being a service on receipt basis, it will be taxable. Now, the question is whether these particular charges will be included in 7,500 rupees, as because it's for common use and it's for procurement of third party. Only question is the expenditure, it's of future nature, or even you can say it's a contingent type of a thing. Whether a society is going to make an expenditure or not is also unknown. How much expenditure society is going to incur is also unknown at the time of collection. Collection is basically on an ad hoc basis. So question remains that whether ad hoc collection can be granted exemption by way of 7,500 by making addition of sinking fund or repair fund collection in 7,500 limit. But that is still a open disputable matter whether it is to be included. There are ARs which says that sinking fund will be included in 7,500 rupees, and if it is totally less than 7,500 rupees, it will be exempt. There are judgments, but this particular contingent liability point has not been raised in AR. There is discussion in recent times that voluntary contribution made by outgoing member is made taxable in the case of Mona Lisa Cooperative Housing Society. It's a triple AR. This particular case cannot be generalized because you need to go through the facts of this particular case. AR as well as triple AR both have noted down that circumstances shows that this is trying to give a color of voluntary and gratuitous payment received from outgoing members, and it's not actually a voluntary payment. In this case, they have mentioned that even accounting entry shows that there is a collection of GST because amount was 17,70,000, and which was bifurcated in the books of accounts as 15 lakhs plus 135 plus 135 CGST and NGST. So whatever affidavits they have submitted to the AR authorities is afterthought. So it depends. It basically judgment is given on a actual facts basis, fact finding basis. It's nothing voluntarily, but actually it is in relation to transfer of flat. Because the transfer fee cannot exceed 25,000 rupees as per Maharashtra State Cooperative Act. So additional amount is taken by way of a donation and created to repair fund. But the nexus is proved in this case, and on that basis, the judgment is delivered that it is taxable. So it cannot be said it's a general decision given, but it purely depends on the facts of the case, because in this case, this is clear-cut color given facts of the case. And so both AR and triple AR has rejected that affidavits and treated it as a collection towards the transfer of flats towards the services provided by the society and made it taxable. As far as input tax credit is concerned, as all of you know, that major condition is that services has to be taxable services. There has to be invoices, there has to be IT. So Rule 4243 also states that proportionate credit to be taken if you are providing partly taxable and partly exempt. So in the case of society or trust or NGO, it may happen that majority of the portion is exempt service and some portion will be taxable. So whatever ITC is available has to follow rule number 42, because partly exempt, partly taxable service. Similarly, rule 43 In the case of asset purchase, that also needs to be proportionately reduced, considering the exempt supply and taxable supply proportion. It is in proportion of the same. Only 43 rule says that asset has to be considered as a 60 months life, and ITC to be divided in 60 months. Rule 42, 43 both have specifically said that if it is used asset as well as the expenditure, if it is used for purely exempt supply, then this proportion is not applicable. It is to be fully disallowed. So in the case of, if we take examples, in the case of lift maintenance or security services or accounting on professional fees, where if your members maintenance charges or collection towards month collection is less than 7,500 as per 77 cent, it will be exempt. In that case, the collection includes collection for lift maintenance and security charges or accounting and professional fees or other charges. Then it is purely in connection with exempt supplies, so no proportion also to be applied. It will be fully disallowed because it is used exclusively for the purpose of exempt supply, provided all members are below 7,500. If some members are there, naturally you need to follow 42. In the case of another issue ITC is whether you can take credit for building repairs. As explained by in earlier session also, this is regarding works contract service for immovable property, building repairs. So as per 17.5, if it is capitalized, then ITC is not allowable. Now the question arose if capitalization has to be considered as per books or as per accounting standards. In few AR, it is mentioned that it has to be as per standard accounting principles followed. So even if it is not capitalized in the books of accounts of the society, ITC needs to be reversed because it is not allowed if it is relating to immovable property. There is very discussed judgment about Mahavir Nagar Shiva Srishti Co-operative, where it is said that no ITC will be granted. But here also, just like earlier case, facts are very important. It is not discussed on the point of capitalization or advance, it's whether it's a capital expenditure or revenue expenditure, nothing of that sort. The argument made by the society was that society also provides works contract service to its member. And as per 17.5, if works contract service is procured for providing subsequent works contract service, ITC is allowed. So society has taken a stand, even society is providing works contract service to its members. So whatever service procured from builder, from contractor is for subsequent supply to its member as a works contract. That particular argument is rejected by the AR as well as triple AR. Says that if society is not a works contract service provider or not in the profession of construction works contract service provision, the works contract service received by the society from appointed contractor are for common benefits of the members. Hence, the society's contention that they are providing works contract service to its members and eligible for ITC cannot be agreed to. So this case is pertaining to this particular argument, and its the capitalization point is not discussed at all in this particular judgment. So whether capitalized or not, that is not at all discussed. This is only on this particular point, whether society can provide works contract service. The triple AR has mentioned that the HSN code 9995 and society has providing membership services only. You cannot segregate these services under different heads. They have also questioned the society that why then you are not considering security charges under the security charges HSN. It's only construction service you are pointing out separately. So it's only to take advantage of ITC that cannot be considered. These all the facts of the case. So that is very important to read the facts of the case before you come to a general conclusion on AR or any court cases. Although AR is not applicable to everybody, but logic argument made by the society as well as the government is important to interpret the provisions of the law. Another case was whether the society can claim input tax credit on lift install. As the Jignesh sir in the earlier session has said that lift amounts to worse contract service because it's in relation to immobile property and resulting in immobile property, ITC is not allowed. This was Las Palmas, Triple AR, Maharashtra. So in the case of ITC, these are two major judgments covered. Input tax credit, by and general food and beverage, renting, hiring motor vehicles, life insurance or health insurance, membership of club is not allowed. So if anything expenditure of this type of fee, then also ITC is not allowed. I think I have covered in time. I have gone little fast just to cover up all the slides in time.
Sir, we can have the question.
Yeah, sure.
There is one question. Sir, suppose ABC Housing Society has 3 types of flat. 1 BHK service charge is 6,500, 2 BHK 7,000, 3 BHK 8,000. Whether GST to be charged on all members or only to 3 BHK flat owners. This was the first question in the chat box.
Yeah, first we clear that. Only if the charges which are taxable exceed 7,500, only those members will be charged with GST. Less than 7,500 will be treated as exempt under 7C. So it's not general rule. If society becomes taxable, each and every flat will be taxable.
Hello? Hello? Hello?
Yes, sir, tell me.
Yeah, there is another question.
Mhm.
If the society charges are including any collection of fund, such as repair fund, building fund, sinking fund, then whether the limit of 7,005 is to be considered excluding this fund or including this fund. I guess you have already answered this.
I already answered. There is AR judgments also in 2021 saying that it is inclusive of sinking fund, etc.
And there is also one last question. Any amount collected as gymnasium, swimming pool or recreational activities, does it form part of rupees 7,500 and is it applicable for GST? You have covered this also.
That also I have covered. It's taxable, fully taxable. It's not covered under 7,500 rupees.
Okay. No more questions, sir. Is any participant having any question? Any participant having any question? There are no more questions. So I now go ahead to propose hearty vote of thanks.
Yeah, slightly I have gone very fast because short of time.
But you are not fast, but you gave all the proper background of detailed background as far as NGOs, trust and societies are concerned, applicability of GST on NGOs, trust and societies. And I am 110% sure that all the viewers or all the participants, they must have enjoyed it and their knowledge is 110%. I am saying that it must have enriched it. And most of the, though these are basic questions, but they are still unanswered. But after listening to you, I guess most of the queries are sorted out as far as NGOs, trust or societies are concerned. So with this, I request everyone to, on behalf of WIRC, I provide you a hearty vote of thanks, sir. Thank you very much for your valuable time. And the presentation was very nice, and in a very simple language, you have explained the difficult provisions. So thank you very much, sir, on behalf of whole WIRC team.
Thank you, sir. Thank you very much.
And participants, thank you all. We end up for the day.